All right, let's take a look at Tesla, because Tesla once again slashing prices. This time in Germany, the EV maker cutting prices of its Model Y in the country after previously pulling back on the cost of its Model Y and Model 3 vehicles in China. That was announced last week. We brought that news to you. We're seeing some pressure on the stock here this morning, off about 2%. The reason why, and one of the issues that analysts have talked about time and time again here at Yahoo Finance, is the price cuts, what exactly that's going to do to margins, the pressure that could then put on margins. We've seen that over the last couple of quarters here for Tesla. And it looks like as these price wars play out on a global scale, that's something Tesla's going to continue to contend with.
I mean, as we see this kind of pullback in EV demand right now, what you're seeing is price cuts as a demand generation mechanism from the auto manufacturers right now, and none more so than Tesla, because their structure is vastly different. It's not a million dealerships that are around the world that are pumping all of these different vehicles that have been produced and delivered to some of those dealers on a regional basis through their own cost mechanisms that can have more of a one-on-one relation for each sale. For Tesla, it's online, and it's being able to go into certain malls to be able to place some of those orders, or at least find out more about what the vehicle can do. What was interesting is that even now we're getting more data year over year about where the used car sales of some of these vehicles are going. Carvana came out with some data this morning. They said within its top 10 best-selling EVs of 2023, two of the top three were Tesla. The Tesla Model 3 was the number one, and there you're taking a look at 1 through 5 there. Tesla has 2 of those positions, and then even if you go out to the top 10, Tesla has 4 of those top 10 positions within those sales too.